Australia's house prices are rising faster than they have in years, and almost every day I'm hearing the same question. Surely this can't continue, can it? After all, prices have already risen significantly in so many areas around the country. So people are wondering, surely there must be a ceiling, right? I mean, people can't afford these kind of prices forever, can they? Well, I've spent over 23 years investing through multiple market cycles, and I've correctly predicted major turning points in the property market, from the Sydney property boom to the post-COVID surge. And the analysis I've just completed points to something most property experts just aren't talking about. What I've uncovered could determine whether you gain or miss out on hundreds of thousands of dollars in the coming years. So in this episode, I'm going to reveal the hidden forces shaping Australia's property market and the crucial steps you need to take now while you still can. You see, many people believe that property prices in Australia have risen to be too high and they must eventually fall. But before we jump to conclusions, let's have a look at what's actually happening in the property market right now. And the major issue is the housing shortage crisis. I still see so many people believe that developers or the government will eventually catch up with the housing market and will bring the market back to balance. I wish that was true. A new report by the National Housing Supply and Affordability Council, or NHSAC, reveals Australia is projected to fall short by 262,000 homes. That's how short it's going to be of its target. That's not a small shortfall. It's a structural deficit that's been building for years, and it shows no signs of reversing. So when basic supply fundamentals are this skewed, you know what it does? It creates persistent, ongoing upward pressure on prices. So if you're looking to invest for maximum growth, look for areas with the most severe housing shortages combined with strong population growth, as these will most likely experience that continued strong price appreciation almost regardless of what broader economic conditions might suggest. You see, while most people believe this housing shortage, it's temporary, or maybe it only affects a few states or regions, the reality is that almost every state in Australia is consistently falling behind on their building targets. Recent data shows that some states, they're barely reaching 60% of what's needed to accommodate population growth. So this is not just a Sydney or Melbourne or maybe even a Brisbane issue. It's nationwide and it's systemic. But the supply issue, that's only half the story. There's another major factor driving this property boom, and that shows no signs of slowing down. And that's immigration. Most people seem to assume that immigration numbers are somehow going to decrease or stabilize to match housing availability. But as you can see from this chart, while migration levels have come down, they're still well above long-term averages. The current federal Labor government is actually set to overshoot their migration forecast by 15%, and their forecasts were already high enough. So each new person who comes to this country, each new family, they need housing, yet we're already falling drastically behind on construction. So what does this do? It creates the perfect storm for price growth. More buyers competing for fewer available properties with no relief in sight. So target properties in areas with infrastructure that can support growing populations and that will attract these new residents. Areas near employment hubs, transportation networks, and with good schools, they're particularly well positioned to benefit from immigration growth. Now, I've spent hours analyzing these markets, and I've discovered that most investors, they're completely overlooking critical checks before buying in today's market. That's why I've created the 2025 Australian Property Investment Checklist, the exact framework I use with my clients to identify the best opportunities. Grab your free copy using the link in the description below. Okay, so now that we understand what's actually happening in the market, let's talk about what these conditions mean for you as an investor or even someone who wants to buy your own home. We have a growing wealth divide. Many people believe the market will naturally correct to make housing more affordable for everyone. They look at data which shows that Australia has one of the highest debt to household income ratios in the world, or the fact that house price growth has far outstripped income growth. And they think that means people won't be able to afford properties and prices must fall. But here's what they get wrong. What we're actually seeing is the emergence of a huge wealth divide. And before you go angry at me in the comments, I didn't create this, you didn't create this. I'm just reporting what's happening. And the fact is that with this wealth divide, some people, they won't be able to afford property and they will be left behind financially. Others who own property will see their wealth continue to grow as prices keep rising due to the supply shortfalls we have in Australia. So this means the longer you wait to enter the market, the further behind you're likely to fall in terms of building your wealth. So if you can afford to, make getting into the property market a top financial priority, even if it means starting with a smaller property than you'd ideally want, or maybe you start looking at satellite cities rather than a more expensive capital city market. The key though is to get your foot onto the property ladder before prices rise even further. Because the fact is, real world competition is intensifying. Many people seem to assume that some of these reports we're seeing in the media about how hot markets are, they are exaggerated, or maybe they're limited to a few premium suburbs. Well, just recently I attended an open house in Melbourne where a standard 3-bedroom home received 20 serious offers within 48 hours of the open home. This isn't unusual anymore. We're seeing this not just in Melbourne, we're seeing this in Brisbane, we're seeing this in Perth, we're seeing this in Adelaide, we're seeing this in multiple regional markets around the country. It's becoming the norm. That's what's kind of scary, because while statistics tell us one story, what's actually happening on the ground, that's even more revealing. The competition for quality properties has intensified to levels I have almost never seen in my 23 years in the market. This competition, it's directly going to translate into price growth because buyers, they're almost not now negotiating with the seller, they're bidding against each other to get the best of the limited housing stock we have available. So be prepared to move quickly when you find the right property, have your financing pre-approved, your deposit ready, and be willing to make decisive offers, because in today's market, hesitation or procrastination can mean missing out entirely. And why do I say that? It's because price growth in Australia is actually accelerating. Many people seem to believe that we're almost at the end of the boom cycle and maybe prices are going to stabilize or maybe they're going to fall. Well, as you can see from this data, house prices are rising in all of our capital cities. They're higher compared to where they were a month ago, 3 months ago, even a year ago. Now, of course, this does not mean prices are rising in every suburb of every capital city. You still need to be selective in where you buy. However, when you look at the data across the country, it clearly shows prices are actually rising at the fastest rate in nearly 4 years. That great Australian dream of owning your own home, well, it's increasingly feeling out of reach for so many young people, with projections for 2050 showing housing could become unattainable for many without family assistance or significant policy intervention. This is, for example, one reason why so many people have reached out to us recently, asking us to help them buy an investment property, not just for themselves, but to help their children in the future. So for you, rather than waiting for a market correction that is almost certainly never coming, focus on what you can control. Look at what you can afford and identify the right areas that have the strong growth fundamentals. Now, it's one thing to understand why Australia's property boom continues and it's not ending anytime soon, but it's another thing entirely to know exactly how to take advantage of these market conditions while minimizing your risk. That's why I've developed the proven passive investor approach, a step-by-step system that's helped over 500 investors build wealth through property in Australia, regardless of what's happening in the economy or market fluctuations. So if you'd like to discuss how this approach might work for your specific situation, you can book a totally free, no obligation call using the link in the description below. But knowing which market to invest in, well, that's only half the battle. Once you've decided to take action, you need a proven system to generate consistent returns. That's why in this next video, I break down the 10 steps to make $10,000 per month with property, the exact blueprint my most successful clients have used to build passive income streams that support their lifestyle goals. Click here to watch that video now.